About It Tuesday. We have a great investing question today. Let me get to this question. Since I don't have a lot of money, are penny stocks a good investment for me? All right. So, first thing I need to say is we should not be choosing an investment based on our lack of funds currently, right? And so when we look at what a good investment is, we have to look at what our target goal is. Like, how much return are we trying to make? Are we trying to get 10%, 20%? In what time frame, right? Are we trying to invest for 6 months, a year, 5 years, 20 years? So what's our time horizon? And we also have to look at our risk tolerance. Like, how much stomach do we have for volatility or risk? Or can we survive emotionally if this thing takes a significant downturn? Or can we even survive, in terms of our finances if this thing takes a downward turn? So we have to look at what our goal is in terms of performance. We have to look at what our goal is in terms of a time horizon. And we have to look at our risk tolerance first. Once we have that in place, then we start looking for a particular type of investment. And so if you're talking about securities, if you're talking about stocks, then we have to look at particular industries and particular companies, and we look at their historical performance. So we look at how well they've performed and what their trend is. Are they trending upward or are they trending downward? And what are the factors that allow them to perform the way they did historically? Are there particular internal things that they're doing that are great in terms of management or products and service, or how they deliver their particular product or service? Or are there external factors? Is there a huge market demand for some reason? Is the economy in a growth period? Is it in a recession? What's the economy doing that affected how well or how poorly this company is performing? Once we do that and we say, okay, we identify a company that we feel has historically performed the way that we are attracted to, then we have to determine what is the probability of that company continuing to perform on par or greater than that during our time horizon. And so we look at, again, what internal factors could affect that and what external factors could affect the performance. That's how you decide what a good investment is. Not, I only have a little bit of money, so let me invest in what I can afford. So let's just look at penny stocks in particular. So the person asked about penny stocks because they were affordable. So normally when you're going to invest in stocks, there is a lot of historical data available, a lot of performance data available. There's a ton of information that allows you to actually analyze whether or not a company is good or bad. When you're talking about penny stocks, these companies don't often have a lot of information available because they're not in the same category as stocks that are traded on the exchanges. And so they're what you call over-the-counter or off-the-market type of investments where they don't have the same amount of information available. These are also small companies, right? So they don't have a lot of liquidity. So any change externally in the marketplace, a downward shift, and they tend to get wiped out. Also, because they're not on an exchange, there aren't a lot of buyers available. So if you wanted to sell, you might have a difficult time selling. So is it really an investment, right? You're talking about penny stocks. I'm talking about things that cost $5 or less, right? And some people are attracted to that, again, because of the price, and they say, well, if it goes up, then I could make a killing. But that's highly speculative. That's not really analyzing well to make a good decision. It's just saying it's cheap, I can afford it, and if it goes up, not based on a lot of data that's available, not based on its ability to withstand changes in the economy, then I'll make a lot of money. And it's the opposite of what you should be thinking. So what tends to happen is when we don't have a lot of money, we swing for the fences and try to get a home run on every swing. And that's a huge mistake because people who swing for the fences tend to strike out more often than others. So You don't have to, because you only have a little money, try to get, as much money as you can. You want to be consistent. You want to be steady. You want to have a goal in mind. You want to have certain standards that you follow, and so that you can make a good decision. And so I don't give specific investing advice. So I won't say do penny stocks or don't do penny stocks, but I want you to go in it with your eyes wide open, clear-eyed, and understand how to choose a good investment and how not to. Now, as an alternative, I'm not saying you should do this or not, but to say I can't afford to invest in the stock market, the things that are blue chip, is ridiculous. So if we look at a blue chip company like, say, Amazon, I think Amazon today was trading at about $2,875 a share, around that. So $2,875 a share, you would probably say, well, I can't afford to invest in Google, which is a solid blue chip company, has a lot of historical data, a lot of performance data. You can look at its trends and all those other things. But you might say that's out of my price range. It's no longer out of your price range, because today you can do fractional shares. And so if you only had $100 and you were saying, well, if I have $100, I can get a lot of penny stocks. No, you can just buy $100 worth of Google if you chose to. And again, I'm not suggesting you buy Google, but I'm just saying it's not out of your price range anymore, because you can now buy fractional shares. And so why choose something speculative that has no real history, that's really volatile and difficult to probably get rid of when you need to, and you're probably going to lose on it anyway, when you can choose a blue chip company and just buy fractions of the share, right? And so I wouldn't suggest that you look for penny stocks because you can only afford penny stocks, because you can afford other things. If you decide that it meets your investment goals, that it fits in your time horizon, and it suits your risk tolerance, then you should invest in penny stocks. But not because you think that's the only thing you can afford. So, great question. Please add to the comments. Let me know what you think. If you like it, like it. If you think it's worthwhile for somebody else, share it. But keep the questions coming, and I'll see you next Tuesday.